Kenya Airways is one of the most interesting and controversial stocks at the NSE. And I'm saying so because even just looking at the share price, Kenya Airways shares currently going at 5 shillings and 34 cents at the NSE. And when you look at performance over different periods of time, over one day, the stock has increased or appreciated by 0.75%. But over the past 5 days, the stock has depreciated or decreased by 4.64%. And then over the past 1 month, the stock has fallen or depreciated by 4.98%. KQ, of course, benefited also from the rally at the NSE, the broad market rally, tail end of last year, start of this year. And I'm saying so because when you look at performance year to date, Kenya Airways is up 51.27%. Simply put, this year alone, KQ stock has increased by 51.27%. And then over the past 1 year, the stock has increased by 10.33%. And yet, if you go all the way back, the stock is still down at a staggering 90.65% from its all-time high. So, after everything Kenya Airways has been through, is this finally a turnaround story worth investing in? Or even so, in case you invest in Kenya Airways stock, you'll end up losing your money. Let's talk about all that in this video. In case you are new here, you are very much welcome to my channel. My name is Afagza Sifuna. I am a finance expert and qualified accountant, bringing you amazing videos about investing and making money each and every day. In case those are kind of topics which you like, down there is a button called subscribe. Click the button to subscribe to my channel so that you are able to watch these amazing videos I upload each and every day. And I will still add it, drop a like on this video. And in case you want me to assist you be able to make informed decisions as you go about your investment journey, you can reach out to me on WhatsApp. My WhatsApp number is attached down below. Reach out to me. Let's have an introductory call. I understand your investment journey, and then I'll see how best I can support you. And as always, I've also attached a link to additional resources in the comment section down below. Go and check that link for you to be able to access these amazing books, which can assist you be able to level up when it comes to investing in stocks. Having said that, when you are buying the stock of Kenya Airways, what exactly are you buying? Of course, now this calls for us to look at the company, right? Because these stocks are backed by a given company. Kenya Airways is Kenya's national airline and one of Africa's major carriers, with Nairobi serving as its primary hub. The business generates revenue primarily through passenger travel, but also has exposure to cargo and other aviation-related services. And Kenya Airways has something that many struggling companies don't have: a valuable strategic position. Nairobi is an important regional aviation hub, and Kenya Airways has an established network connecting Kenya to destinations across Africa and international markets. So fundamentally, this isn't a company without viable business. Business is there. The problem is that running an airline is incredibly difficult. Fuel prices can move sharply. Currencies can move against you. Aircraft can become grounded. Interest and financing costs can become overwhelming. And these are some of the nuances which Kenya Airways has been facing over the years, as you are going to see. So, when you are looking to purchase Kenya Airways stock, right? What is Kenya Airways investment thesis for you as an investor? Simply put, what is going to entice you to buy the stocks or shares of Kenya Airways? The very first thing is Kenya Airways turnaround opportunity. And I'm saying so because in 2024, Kenya Airways demonstrated that the underlying airline operations can generate significant operational profits, right? Beyond the losses which they've gone through, they prove that they can generate operational profit. And I'm saying so because in 2024, Kenya Airways operating profit was 16.6 billion Kenya shillings. And then the second thing which you're going to be jumping onto when you invest is passenger demand. And I'm saying so because there is still significant demand for air travel in Africa, and Kenya's position as a regional business and tourism hub gives Kenya Airways an important market for it to tap into. And then the third thing which we're going to be jumping onto is fleet recovery. I'm saying so because part of the deteriorating 2025 numbers at Kenya Airways was linked to aircraft availability problems. If Kenya Airways can restore aircraft availability and increase capacity, that is going to give the company an opportunity to recover revenue. And then the fourth and also important thing which you're going to be jumping onto is the share price. At 5 shillings and 34 cents, Kenya Airways is up more than 51% this year. Of course, there's disparity across different periods as to whether it increased or even depreciated, but just this year alone, the stock has appreciated by 51%. That tells us that investors are already becoming more optimistic about the company's future, given they've seen the stock has appreciated quite commendably this year. Having spoken about that, let's really examine the turnaround story of Kenya Airways. Is it actually working? Because we all know Kenya Airways has been implementing turnaround for it to be able to get back to profitability, okay? And this is where the story gets a little bit complicated. In 2023, Kenya Airways reported a net loss of approximately 22.7 billion Kenya shillings, okay? Then came 2024, the company reported a net profit of approximately 5.4 billion Kenya shillings. That looked like a major turnaround for the company, okay? But then came 2025, the company swung back to a net loss of approximately 17.2 billion Kenya shillings. Revenues also declined from approximately 188.5 billion in 2024 to 161.5 billion in 2025. And operating performance deteriorated too significantly, moving from an operating profit of about 16.6 billion Kenya shillings in 2024 to an operating loss of 5.6 billion in 2025. This company is quite complicated, right? And I'm saying so because 2025 was a major setback. But remember, 2023, it did get a loss. 2024, it recovered. 2025, it went back to a loss. And that is the first major concern, okay? But why did Kenya Airways lose money again? It will be good for us to really understand and appreciate why it lost money, for you even as an investor out there to know if this is something which is going to be difficult for Kenya Airways to fix, or even so, you're going to be confident to invest in Kenya Airways stocks, knowing very well the company is going to recover. I'm saying so because Kenya Airways faced significant operational challenges, including aircraft availability problems. Several Boeing 7878 Dreamliners were grounded, limiting the company's capacity at a time when demand remained relatively strong. And when you are an airline, aircraft availability matters enormously. You can have customers who want to fly, okay? You can have routes that are profitable. But if you don't have enough aircraft availability, you simply cannot sell those seats. This is why I think 2025 numbers need to be looked at carefully. The question isn't simply, did Kenya Airways lose money? We know it did, right? The more important question is, were the losses caused by a permanent broken business model, or were they caused by problems the management could actually have fixed? And that distinction matters to investors. When we speak about that, let's look at the balance sheet, right? And the balance sheet of Kenya Airways is the biggest problem. When we get to look at the key drivers around financials of Kenya Airways, the balance sheet speaks volumes. And this is because even if Kenya Airways manages to become operationally profitable again, shareholders need to ask some critical questions. How healthy is the company financially? And this is where Kenya Airways remains extremely risky. I'm saying so because at the end of 2024, the company's liabilities exceeded its assets by more than 118 billion Kenya shillings. Yes, guys, liabilities exceeded the assets of Kenya Airways. Current liabilities also exceeded current assets by approximately 77.8 billion Kenya shillings. That is also a massive situation where current liabilities exceed current assets. So this isn't a normal profitable company temporarily going through a bad year. Kenya Airways has a severely impaired balance sheet. And this is why I wouldn't look at one profitable year and conclude that the turnaround is complete. The company needs to do two things, okay? The first thing is that it needs to become consistently profitable. And the second thing is that it needs to repair its balance sheet. Both have to happen, unfortunately, for the company to be in very good health. And then, when you look at dividends, unfortunately, Kenya Airways is not a dividend stock. And I'm saying so because if you are looking at Kenya Airways because you want dividend income, I don't think this is the right investment thesis for you. And I'm saying so because this isn't like, for example, companies like KCB, Equity, Co Bank, and other companies which have reliably paid dividend. Kenya Airways hasn't paid dividend to investors for years. So you're going to be buying the possibility of turnaround, but don't bank on getting dividends immediately. When you buy Kenya Airways, your potential return is going to come from primarily capital appreciation if the company becomes sustainably healthier and more profitable, because the market is going to reflect that. But then again, don't buy banking on dividends because Kenya Airways hasn't paid dividends recently. So what is Kenya Airways actually worth? Simply put, let's look at valuation of Kenya Airways, and most importantly, even see if valuation makes sense, okay? When you look at different ratios, starting with the PA ratio, PB ratio, dividend yield, you name it, all these are nuances which we examine for us to be able to determine if a company is valuable or not. For KQ, things are extremely interesting. And I'm saying so because Kenya Airways, across some of these matrices, is particularly not useful at all to investors. The company made a significant loss in 2025, okay? So a conventional PE ratio doesn't give us much information because, they made a loss, okay? There is also no meaningful dividend investment case because the company hasn't paid dividend recently. Therefore, there isn't even a dividend yield to consider in this context. And because of the company's heavily impaired balance sheet, book value needs to be interpreted very carefully. And I'm saying so because the real question to ask isn't, is KQ cheap at 5 shillings and 34 cents? I think the better question is, what am I paying today for the possibility of Kenya Airways to become profitable again? And that's a much harder question to answer because the stock has already risen by 51% this year. That means the market has already started pricing Kenya Airways in some degree of recovery. But then again, will the market continue pricing Kenya Airways favorably? That's why we need to examine what could go right for Kenya Airways as a business and also what could go wrong. What could go right for Kenya Airways at number one is fleet restoration. I've spoken about the availability of aircraft and of course it's been recovering. Number two is passenger demand. Okay. Number three is operational efficiency, where Kenya Airways controls its costs. Number four is Kenya Airways scaling up the cargo business. And then number five is Kenya Airways doing balance sheet restructuring in a successful and sustainable way. And then when we look at what could go wrong, at number one is fuel price. And I'm saying so because fuel is one of the biggest cost drivers when it comes to airlines business, right? And then number two, currency risk. Remember, of course, Kenya Airways serves destinations across the world. So currency risk is something very real because it's exposed to different currencies. Number three is aircraft availability. 2025 showed us that Kenya Airways did really have stringent business because of damaged aircrafts. And then number four is debt and balance sheet situation. This remains perhaps the biggest fundamental risk. Is Kenya Airways able to fix it? In case it goes wrong, then it's very terrible, okay? Number five is competition. We've all seen competition Kenya Airways has faced, more so from other African airlines across different international routes. And then number six is additional capital requirement. If KQ needs additional capital to repair its balance sheet, right? Investors need to consider what that could mean for existing shareholders, right? So even if the airline recovers operationally, shareholders still need to see how that recovery translates to actual value for them, which of course has been quite fickle in recent years. Having said that, what is my verdict on Kenya Airways? Will I buy the shares of Kenya Airways, or even so, what will be my approach? My answer is no. I would not buy Kenya Airways shares at this point. And there are several reasons for that. First and foremost, the turnaround is not yet proven, right? This was because Kenya Airways went from 5.4 billion profit in 2024 to 17.2 billion loss in 2025. I want to see consistency before I can commit my capital to Kenya Airways. Secondly, the balance sheet remains extremely weak. And I'm saying so because the company still has massive financial burden to overcome. And then the third reason as to why I will not buy the stock of Kenya Airways is because the stock is already risen significantly this year. We are talking about year-to-date change being 51.27%. That's already an incredible increase in the stock this year. So I presume the stock has already reflected the price and any possible changes, okay? And then number 4, there is no dividend case, right? So I wouldn't invest in a stock that is risky and even it isn't paying dividends. And then number 5 is because there are better core portfolio opportunities at the NSE. In case I'm constituting a portfolio, Kenya Airways won't be a core part of my portfolio. So, no, I wouldn't buy the stock of Kenya Airways. But then again, this doesn't mean that Kenya Airways is a bad company or that the stock cannot rise. The company is, of course, doing all it can to come back to profitability, and of course, the stock can still rise. But this is just my verdict based on how I am looking at the outlook of Kenya Airways. Would you buy the shares or stock of Kenya Airways? Or even so, what will be your approach? Comment down below in the comment section. Let's continue discussing. Cheers, guys.